Good morning, everybody. Hope you guys had a great weekend as we head into the last full week of October. We'll have a few things to talk about. We'll look at futures. We'll look about how last week ended up. Not a bad week. And we'll talk about more when Dave joins us here in just a few seconds. Before we do that, there, let's not forget that there are so many things in this world that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have and making sure that it lines up where it should be based on your current circumstances. And that's why I developed the core retirement design. Give me a call, 863-382-0037. Schedule your core retirement review. Hey, with that, we've got Dave coming up next.
It's 20 before 9 from your 105.7 Light FM. Good morning. Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. So there. Speaking of general information, it's time to check in and find out what's in general happening to your general purpose funds and your retirement funds, your IRA and your 401k this morning. Phillip Statler from Statler Financial Services is here as usual. Good morning, sir. It was good to see you Saturday at Shred Day.
Hey, good morning, Dave. I was glad you were able to come out and join us. It was a good time, great weather, probably the best weather we've ever had in the 12, 13 years we've been doing that. Now, I will say that because the weather was so nice and there were so many events going on, the traffic was a little less than we'd had in years previous. I think we probably hit about 3,000 pounds. That was probably about 1,500 pounds lighter than what it was last year. But hey, start saving up now because we'll be back next year for another shred day.
Yeah, it's time, people. Stuff those shoe boxes, stuff those bags, and bring them down to us next year about the same time because we'll be doing it again in order to keep you safe. Speaking of safe, if you are in the major indexes, you didn't have a bad week last week. Friday closed with the Dow and the S&P at new records. I harken back to all of the predictions for how the S&P was going to end the year. Dow closed on Friday up 37 to 43,275.91. S&P closed 58.64 at 67 cents, and there are still some brokerage firms saying we're not going to close above 5,000 for the year. I've got a sneaking hunch their credibility is in the commode. NASDAQ was up again about 116 to 18,489. Russell retrenched a little bit, but they were up 2% last week. In contrast to the S&P was up by 0.9%, the Nasdaq was up 0.8%, the Dow was up 1% last week. They took a little profits on the Russell 2000, I gather.
I think so. I think they were, it had a great week last week. It was up. And it wasn't off much, less than 1/4%. So, it could have just been a little trading here or there, a little profit taking, not a lot, but, who knows what's really driving that thing.
Absolutely, and it doesn't take a lot to move some of those stocks either because they're relatively lightly traded a lot of the time. A lot of that is optimism over whether or not the economy is going to get a little bit more stimulated, and pulled up the dot plot this morning from the Federal Reserve governors, and the dot plot right now, it looks like they're expecting, at least this is what the market is expecting, another half-point cut before the end of the year in interest rates, probably 2 quarter-point cuts, and I'm still looking at 3% inflation, and the fact that the market is booming, I'm kind of wondering whether or not that's really going to happen if we're going to have a disappointment come November.
Well, it could be that we end up with, like you said earlier this morning before we went on the air, is that maybe the Feds just acquiesce to this is going to be the new normal, and we're not going to get that 2% inflation that they kept talking about.
Well, I've been kind of standing on that ever since that 0.5% cut that we took a month or so ago. That sounds to me like a clear message from the Fed that they're throwing in the towel on getting down to 2%. I think we're thinking 3% is the new normal, and that's kind of backed up by another little chart that I found, poll of investors as far as what they expect as far as soft landing, hard landing, no landing. The number of people expecting a quote-unquote hard landing from this round of inflation did go down markedly last month. I mean by like almost half. but the number of investors who expect no landing, in other words, 3% inflation is the new normal, that doubled as well. Still, the vast majority expect a soft landing, but the number of people that are kind of taking up my point of view that we're going to just get used to 3% inflation seems to be growing rapidly, and that's like 3 months in a row. They're finally saying, the Fed's saying, screw it.
Yeah, it's yeah, it's interesting to see how the numbers are going to work out, but I wish they would hold to their guns, but I'm not so sure they are.
I'm not either. It's interesting. We are seeing a bit of a shift in terms of investments down the line. Looking at sectors within the S&P 500, utilities have been relative dogs for the last couple of years, but utilities over the last week were up by 3.4%. And that kind of surprised me because I figured dividend stocks might not be doing as well, and I always assume utilities are the world's most reliable dividend stocks. Real estate and financials made sense to me because we had a lot of reports. They were also up, but the investors are not taking as many risks right now as they had been before, but that's resulted in some interesting sectors suddenly starting to grow again.
Well, it is. There's always a sector rotation, and we've been in the tech sector for a long time.
Mm-hmm.
So it makes sense that we would start to rotate out of that, and because we've got some, significant highs. And so it's not unusual to start to see some type of rotation out of those areas to some new, not new sectors, but getting back into some other sectors that maybe have not performed as well over the last few years.
Mm-hmm, understood. Yeah, I guess it's just the specific sector that grew, the utilities sector. I didn't expect that to be the next big thing. Only on the grounds that, like I said, in an era of interest rates, in the direction they're going, a dividend stock, I wouldn't expect their principal value to go up that much in an era of declining interest rates. Kind of an interesting thought, anyway.
Yeah, it is.
Interesting tidbits floating around. Number one, my fear and greed index has now tipped into the era of extreme greed, and I always flippantly say with an element of truth to it, that indicates the FOMO syndrome is going on. That's not necessarily good news. That means the amateurs are getting into the market again.
That's right, it does, and so that's not a good sign because at some point, the retail guys take over. And what happens is eventually you see the professionals get out and they leave the retail guys hanging out there. That's what's happened the last two major bear markets that we've seen. And so I think that that's something that people need to be aware of and make sure that they understand what their investments are, how they act, and don't just set them and forget them.
And that's a little bit why the cynics of the world call Wall Street a giant Ponzi scheme. It's really not. But what happens is, things start going up as the pros start buying and run things up by a bit. Then all of a sudden the amateurs get busy. They end up bringing the values up even more. And then the pros say, oh, now I've hit my multiples. Now it's time to get out. And what happens is the guys that get in too late become victims of their own optimism. And it happens. It's not a Ponzi scheme. It's just a function of the numbers. The guys with jillions of dollars in research funds, they know when they're going to get out. And the problem is the amateurs get in late, run the values up to the point where the pros do get out. And then the amateurs get screwed.
That's right. Yep. Hey, I'm looking at interest rates, Dave. The 30 years almost to 4.5% now.
Whoa!
Yeah, it's a 4.44. That's a big jump.
What's this crud about interest rate cuts? The bonds are holding up nicely, aren't they?
They really are.
You got some tidbits out there. We got merger talks that really haven't put their head above the foxhole for a little while. Our friends at Cigna and Humana are talking about joining forces.
They are, and evidently there used to be some talks going on because the article said they're going to resume merger talks between Cigna and Humana. Humana, I think, would be the takeover company. They would take over Cigna. Cigna would no longer exist. And there's very early stages. Nobody really knows exactly where this will end up. If it will even come to fruition, we don't know that. If it even does, then it's still got to go to the Federal Trade Board to determine if they're going to allow it, the Department of Justice and all those guys. But it's got Humana trading up 4.25, and it's got Cigna trading down 3.5.
Ooh. I look at those two big names, maybe just in the sector of the market that my age puts me in at this point, and I keep thinking that the Department of Justice has got to raise an eyebrow on that one.
I would think so as well. Given, that's taking a major player out of the health insurance industry, and I'm not sure where where they draw that line at for sure. Um,
Absolutely. It just sounds like it's a big one to me.
hey,
Other things going, I'm
uh,
sorry, your turn.
I was just gonna say we've been talking about Boeing off and on now for
Yeah,
a while, and their machinist union have finally reached a new contract proposal. And if it passes, it could pass, it could end this month-long strike we've been seeing. It includes, get this, a 35% wage increase. And so, yeah, then I guess the vote is expected to come out on Wednesday. It does have Boeing trading up 3.3% this morning.
I guess surety for something that they're not particularly happy with beats the heck out of uncertainty, doesn't it?
Well, it gets them back to work, right? At least we can get some production.
Absolutely. I got a tidbit here. That's what I was going into. Their striking machinists average 115,000 a year as it is. So you put 35% on top of that. We're talking about 100 and a half and a little more than that. That's not a bad paycheck, is it?
Absolutely not.
And word is they're going to actually work to build the planes better so the doors don't fall off too.
That's a negotiating point, huh?
Yeah, that's it. Yeah, it was one of the sticking points. They wanted to make sure the doors didn't fall off anymore. We talk about China and the problem they're having with stimulus and trying to get their economy moving again. So far, based upon what we're seeing, it ain't working too good for them. Alibaba, JD.com, Neo stocks are all falling on the Asian rim markets. When we get to the indexes, the Chinese indexes did not do too bad overnight last night, but the Central Bank of China is just slowly but surely learning the art form that our Fed's been practicing, sometimes well, sometimes not so good for years, stimulating the economy. This is kind of a new territory for them to be in.
Yeah, it is. But who knows? They'll get it figured out, Dave, and they'll figure out what they need to do to make it work right.
And if
Um,
all else fails, the government just needs to put out a buy order.
yeah. Hey, get this,
Command,
Dave.
yeah.
Goldman came out with a forecast of the S&P 500
What are they saying now?
that they expect the annual average rate of return for the S&P 500 over the next 10 years is going to average 3%.
Three?
3%.
Weren't they the ones that were saying we were going to end the year at 4,200?
I don't know. I don't see that in here, but they think that the growth is going to really stymie and slow down compared to the last 10 years where we had a 13% growth average out. So it's one of those things that nobody really knows, but we're talking about a big banking group here with some little bit of a pessimistic outlook for the next 10 years.
Yeah, and at the same time, the multiples that you and I have been worrying about for some time are still up there on the S&P, and somewhere down the line, if the profits don't catch up and make the multiples realistic, things got to go into neutral until things catch up and get back into balance, don't they?
Yep, they do. That's
Ab-
absolutely right. We've got to get earnings have got to justify the stock price, and I just don't know that they do right now.
Yeah, right now they ain't doing it. Resetting the table, it was a good day. We can call it mostly sustainable gains on Wall Street on Friday. 45 minutes before we open this morning, what are we looking at, sir?
So right now we've seen some improvements on the futures. They were all significantly in the red. They still are, but not by as much. We've got the Dow Jones Industrial 30 down about 13,100. That's about $55. The S&P 500 is down a quarter of a point. That's 14. And then the NASDAQ 100 down by 0.4%. On the other side of the coin, got to hit the right button here. We got silver. Oh my goodness, Dave. Up almost 3.5% this morning. Get this number, $34.38 an ounce.
Wow.
Yeah, that's
Time to
huge.
unload Grandma's silver service.
And we got gold up 0.8 to $2,752 an ounce. Crude oil up 1.8% this morning, but it's down significantly from where it was Friday. It's at $69.94 a barrel.
We'll take that happily too. As long as it stays in that trading range and gets under 70 periodically, I'm happy. Overseas markets, the Asian rim was kind of a tale of two cities. The Chinese mainland markets were up substantially by around a 1% mark this morning at the close at 6 a.m. Rest of the markets off fractionally, nothing exciting, but on balance it was red ink. Europe is generally having one of those, I think we're going to sit back and see what the United States is doing days. Everything is pretty well off. The overall European indexes down by a little under 0.5% halfway through their trading day. That's something that could very easily turn around by the close over in Europe as well. Getting a beat on one's retirement and getting a plan together so I know I'll be able to retire, that takes your eyes to get me there, Phillip. How do I find you to take advantage of those eyes?
David, give us a call at 863-382-0037 to schedule a core retirement analysis where we'll help them analyze and make sure they're on the right track for the retirement they always dreamed of. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning with up-to-the-minute news here on Light FM. Phillip, enjoy, and I'll see you then.
All right, man. Have a great day.
Thank you, sir. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Hope you had a great weekend. Join us again tomorrow, same time, same place. Until then, have a great day. Bye now.